Hi everyone, and welcome to this month's episode of the B2B Club. It's Ollie here from the marketing team at Hokodo, and I'm just here to give you a quick intro to the final episode of this series. So following on from the last month's episode, focusing on the announcement of PSD3 and the impacts it will have on the world of B2B payments, this month we are continuing with this theme and taking a deep dive into one of the industry's hottest topics, open banking, with a particular focus on how it can be leveraged by merchants and third-party providers to make B2B trade more seamless and secure. So the audio from this episode actually comes from a webinar that we hosted earlier this year with the open banking provider Fuse, featuring their co-founder Oscar Wislby and Hokodo's Director of Data Science and Fraud, Nicolas Rabinovitch. So without further ado, I'd just like to say a big thank you to everyone for listening to the first series of the B2B Club, and we'll be back again in the new year with some new episodes for you. And in the meantime, I hope you enjoy this month's episode.
So over the next 40 minutes, we're going to be taking a deep dive into one of the industry's hottest topics, which is open banking, and with a particular focus on how it can be used in the world of B2B to make lending more seamless and secure. Now, just to set the scene a little, since the introduction of the Second Payment Services Directive, PSD2 in the EU, open banking has been shaking up the financial industry and revolutionizing the way that the banks are sharing data with each other and with third parties. Initially, people were solely considering open banking with an emphasis on consumers and the advantages that it brings to the retail sector. But since the B2B industry can attract the most money, the focus has quickly turned to helping the SME and the B2B space. So the volumes and margins in the B2B industry are obviously much larger, and business customers are prepared to pay well for efficiency gains. SMEs typically make up 90% of most economies, and only 45% of companies report being completely satisfied with their firm's payments or the banking capabilities. So there's huge potential here for open banking to improve efficiencies and gain high rewards for solving them. So let's kick off with some introductions. I'd love for each of my guests to give a quick introduction, just give your name and your company, and a little bit of background on your experience with open banking. Nico, would you like to start?
Yeah. Hey, good morning, everyone. Nicolas Rabinovitch, working for Hokodo and responsible for all risk decisions on the credit and fraud side. And my experience working with open banking, I've had experience on the B2C side, and now working to leverage open banking in the B2B area. I guess, summarize my experience. It's about still much more of a nascent usage and use cases of open banking in the B2B than what I've experienced within the B2C world. But there are many opportunities, and the crux of it is really about how to leverage this information for the best of our customers.
Fantastic. Thanks, Nico. Oscar, over to you.
Yeah, hi, I'm Oscar Wislby. I'm head of data science and co-founder at Fuse, which is an open banking analytics company. We build products for open banking use cases. My experience with open banking, it comes from the credit risk side, so originating loans based on open banking data and building credit scores on open banking data for both B2B customers, but also consumers.
Fantastic. Thank you, Oscar. Thank you both. Okay, so let's get cracking. So I think maybe the best place to start is thinking just kind of more broadly about a definition of open banking. Oscar, can I come to you for that?
Yeah, absolutely. I guess we can take a step back. So open banking is really at its core a set of APIs, a framework that allows third parties, such as Fuse, for instance, or Hokodo, to plug into the open to the banking ecosystem. So third party in the sense that it's not a bank and it's not the bank's direct customer. And what this allows is, with the customer's consent, you can make use of this data in a manner that is safe. Open banking relies on OAuth, so you're not sharing any credentials with the third party that would give them inappropriate access to your banking data. And I guess from a kind of a global perspective, open banking has been, there's kind of two sides to it. In the US, for instance, it's largely industry driven. So companies and banks realize the commercial opportunity in sharing this data. And in the EU, where we're familiar with the PSD2, it's been regulatory driven. So the aim is to stimulate competition and innovation under the PSD2 directive. Furthermore, and my final point, I guess, is that open banking really comprises of two kind of domains. One is the payments domain. So you may be familiar with the way you can initiate payments, instant payments directly from a bank account. And the other is the account and information sharing domain, which gives third parties access to your actual transactions and information contained on your bank account. And both of these are really shaping the future of open finance and are equally important. And I think we'll touch on both of these throughout the discussion.
Fantastic, thank you. Perfectly clear. So, I mean, thinking about kind of, well, compared to the B2C world, what are some of the challenges that make open banking a little bit more complex in the B2B environment?
Yeah, so I guess from the perspective of assessing account information, for example, loan origination, the fact that you may have multiple bank accounts with different users, large number of transactions for a business, and it's difficult to perhaps discriminate between business and non-business spend. The fact that you have bank accounts in multiple countries or geographies can make it difficult to track payments, and you're really looking for an accurate picture of the user. And then also there's difficulties in categorizing the data and understanding the actual data. So obviously open banking gives you access to the data, but then after that, so what? What do you do with it? And I think that's actually the really interesting point that I think we'll touch upon as well in this discussion is what do you do with that data once you have it?
Yeah, it's one of my favorite phrases is I have a lot of data, but I don't have a lot of information.
Yeah.
I think another challenge, comes from the fact that sometimes the authentication or login process for a business bank account can be a bit more cumbersome and a bit different depending on country and the bank for a business account than a consumer retail account. So, that's a challenge to be considered as part of the customer journey.
Yeah. So we have all of this banking data, which is the good news, right? We have access to all of this data, which is great. But how do we make use of that data? So what are Fuse doing in that respect then? How are you making or categorizing that data?
Yeah, exactly. I think categorization is key. So there is a need to normalize and categorize transactions into kind of standard income and expense categories that we may all be familiar with, because that's really kind of the language that you would then use downstream of that to build product on. So, for instance, understanding what someone's disposable income or kind of cash flow situation is, you really need to understand what is kind of discretionary spend versus not, or what is recurring spend and what is not. And yeah, I think despite the fact that there is considerable standardization from the open banking APIs, there are a lot of challenges with the data that you receive. So the fact that there are obviously numerous payment service providers across the globe, the fact that formatting across banks is different, will depend on bank to bank, and different geographical regions will have different merchants, different formatting procedures that really make it very challenging to kind of holistically sum up a business or an individual's banking kind of situation. So what Fuse does is we employ machine learning to automate the process in order to stay up to date with the evolving nature of transactions. And for us, this is very important because there's no way a human can stay on and do research and stay up to date with the ongoing changes that you see in the financial world. And so we have built out a suite of machine learning models that allow us to tag and categorize transactions and flag any kind of anomalies that we see over time that allow us to give our end users the most kind of accurate data.
So this is super interesting. So we have all of the data, Nico. We have all of the data now neatly organized into boxes. So, what do we do with that now? And kind of how do B2B sellers benefit from having all of that data kind of categorized? What do they see at the end of it?
Yeah. So, on the risk assessment side, this data is, very fresh. it can definitely help sellers to grant credit limits to a population they wouldn't have been able to risk assess before. So more accurately, with more confidence, but also more recent, and this without really putting too much burden in terms of their buyer experience. No longer need to request number of months of bank statements, number of paper forms to be sent. So this goes out the window, and it's a much slicker experience and helps the seller, operate much more efficiently. And I guess, coming with that additional protection around potential fraud, it's a lot easier to falsify some PDF of bank statements than it is, making up a bank account with a pretty large transaction history. So this connection will also help sellers reduce their fraud risk. I guess finally, this can also be seen as a competitive advantage for sellers, by offering their buyers the best experience possible, by having the seller making the best risk decision possible. Then they can help the seller leaving the competition behind.
Yeah, makes total sense. Is there kind of an element of kind of like shared learnings as well here? So for example, if you've got a particular buyer of a seller that maybe is kind of showing some sort of fraudulent activity, and they went from one seller to another, if they've been rejected for credit, or we picked that up as part of the data analysis, then that would be flagged if they tried to go to another seller. Does that make sense?
Yeah, that makes sense from a Hokodo perspective, because we're able to leverage our network of buyers and then give benefits to our different sellers. I guess outside of Hokodo, the data sharing and learnings is quite limited. However, I guess we'll touch on PSD3 at some point. This may evolve and get a bit more traction from a regulatory standpoint when PSD3 eventually comes in, where we expect a bit more, data sharing around fraud prevention.
Yeah, absolutely. And I mean, we've talked there a lot about the kind of the benefit to the sellers, to the merchants, but what about like their business buyers? So I read this report recently by the ECB, by the European Central Bank, that said that in 2022, the SME loan rejection rate was, by euro area banks, increased by 4%. So for small businesses that are urgently kind of looking for finances, then this is a real problem, right? So like how is this kind of like helping that end buyer to get kind of access to credit?
Yeah, I think that's really relevant for SMEs, because what we tend to see in more challenging economic climate that we're sort of in now, lenders will tend to tighten up their underwriting approach and their risk, and SMEs tend to be first in line to be impacted by the change. That's mostly due to the very little public data that's available for these SMEs, and this is where open banking is a great opportunity, I guess, for more innovative players that do use this data. We can keep the doors open to some of these SMEs, given that we have very fresh and accurate and relevant information to be able to understand the risk that would come in with these SMEs and make a better decision, a more transparent decision. I guess the other aspect is around the payment aspect. So not only about the data sharing element, but as Oscar mentioned at the start, open banking is also about being able to make payments directly from open banking, which is a much easier and quicker way to pay suppliers from a buyer's perspective.
Yeah, makes sense. I'm just thinking about kind of general knowledge, I suppose, of open banking, but if you ask any, we live in the world of, kind of fintech, financial services, and open banking is a term that we hear regularly. And obviously, Oscar, from your perspective, you're a provider of open banking data. But if you was to ask your standard business owner, kind of out on the street, what open banking is, I think you struggle to get kind of a real comprehensive answer. But we know that it is kind of used, throughout their daily sort of, or in the kind of financial lives. So what does that kind of like user journey look like, particularly for a kind of a seller and then the buyer perspective? Nico, like thinking about the kind of lending process from Hokodo, where are they touching? Where would they see the open banking?
Yeah, so I guess starting on the buyer side, a couple of approaches that can be used. Either we can include this open banking connection as part of like an online checkout experience, where as part of the checkout process, if online, then there'd be a page as part of the experience that will request the buyer to log into their bank account, provide consent, and being clear, showing what data is being shared and for how long, then selecting the bank account that the buyer is willing to share, and that's pretty much it. It may take a few seconds for the data to be actually transmitted, stored, and then used, but that can be a very, very sleek process as part of an online customer journey. The alternative approach that we also try on the B2B side is to take this connection and experience outside of the checkout journey, because as Oscar mentioned, there are more challenges on the B2C side, and maybe the person who's ordering goods may not be the person who has access to the business online banking credentials. So we also use an approach where we contact the buyer via email and following the purchase, and then request an open banking connection outside of this purchase journey experience. So we can go around the challenges of who actually has access to this business banking credentials, and complete that outside of the customer journey.
Okay, fantastic, thank you. Oscar, I read another report recently that said, it was in early 2023, and it said that around 750,000 SMEs use open banking products. So despite the kind of more products being available to consumers, adoption by businesses is generally higher than consumers, with 16% penetration, it said, versus 11% for consumers. So I mean, it's great, but it's still sort of relatively low numbers, aren't they? How can the adoption of open banking in the B2B world be accelerated, do you think?
Yeah, I mean, this is the key, right? I think there's two kind of central themes that could really help here, and the first one is education, really getting the wider community to understand how open banking works. The actual fact that it is a very safe way of sharing your data. You're not giving access to your bank account. You are merely allowing a third party a view of that data, and that view can be revoked at any instant that you wish. So it's only with the consent of the user that a third party will have access to this data. They cannot make payments on your behalf if you don't consent to it, or so forth. And the second one is showing the value. The industry needs to, over time, show the value in sharing your data. Like the reason you share your data is because you want something out of it. And Nicolas touched on a lot of these good points. Key being in Hokodo's example, for instance, that you can increase your credit limit by adding this data to the mix. And so I think once those two things kind of come together, and bearing in mind that it's still a relatively nascent technology, I guess, 5 years in now almost. But I think with time, these two things need to come together to allow the open banking ecosystem to accelerate.
Yeah, I definitely agree on the value aspect. And I was a bit surprised to see more adoption on business versus consumer. But I would bet that most of that use case is around business connecting open banking to their accounting software, because there is clear value there and helping them with reconciliation. But beyond that specific use case, I don't think open banking in the business area is very well developed for now, aside from the accounting and open banking thinking.
I think you're right. I think it's kind of a little bit of the terminology and the language that we're using around kind of defining the value. We hear a lot, going back to kind of the start of our conversation, we hear a lot about the data, the sharing of the data and the value in that, but actually having a lot of data in front of you is not always really helpful, is it? It's the kind of the information. Like in personal circumstances, I use open banking to have that kind of full view of, all of my kind of accounts, which is really, really great. But then you sort of think, well, what do you do with that data? Just kind of seeing all of your account balances like in one place is nice, but then I could go into the different apps and have a look. It's like, it'd be better to have some sort of analysis around that, or some sort of, predictions on actually, if you move this from here to here, then maybe that would get you better kind of interest or something like that. But yeah, I think you're absolutely right. So, I mean, Nico, you mentioned the big old PSD3 earlier, but let's have a look at a touch at that, on that now. But earlier this year, the European Commission published its draft legislation for PSD3, the Payment Services Directive, which is going to be coupled with a new payment services regulation as well. And it's really building on the progress that PSD2 has made. So what impact do you think that PSD3 is going to have on open banking, and particularly in the B2B world? Oscar, if I come to you first on that.
Yeah, so the new kind of changes are very much welcome. I think we are going to see continued improvement of the API qualities. There's going to be a more streamlined authentication process. So what this will mean is that at checkout, there'll be less pain, quicker authentication journeys, etc. Direct access to payment systems for fintechs. This is great for innovation in general. And then I think, IBAN and name matching is going to be a new feature as well, I believe. And this will all help kind of prevent fraud. Nico, I don't know if you want to add anything to that.
Can you tell me a little bit more about that, actually? Sorry, first, about the IBAN and name matching.
Yeah, I mean, having access to more data kind of on the, across borders, IBAN numbers on accounts, and kind of name information will allow you to kind of reconcile whether this is in fact the person or entity you're dealing with, and that ultimately allows companies like ours, Fuse, to build systems that help prevent fraud or flag fraud risk in many instances.
Yeah, it's a bit of a democratization of what we've experienced as consumers, confirmation of pay. But yeah, making it, I guess, a bit more streamlined across EU and accessible to third parties rather than just between banks. Being able to do that with open banking data today, with retrieving the account information, but so vastly different between banks. What name do you get back? So that will help to streamline that.
Nico, I'd love to ask you, I mean, what's kind of in your experience so far, with using it as part of the kind of Hokodo process, what's kind of one of the biggest or sort of best use cases you've seen, like a success story? Are you able to share without details, obviously?
The best success story with open banking at Hokodo has really been around improving our service to sole traders. Like sole traders are on the very small side of SMEs. There is little data available. Using traditional credit bureaus, yes, is helpful, and it's like there's almost no alternative. So we do that, but as a complement rather than alternative, because I do see the two solutions working together, like a traditional credit bureau and open banking data. We're really able to offer better service, higher limits, and provide a better experience to our sole trader base.
Yeah, that's a great use case, actually. Oscar, from your perspective, are there any kind of insights that have popped up?
Yeah, I mean, we've had some key success stories with, for instance, one of our clients, the open banking credit risk score that we developed at Fuse really helped them increase their through the door population. So they were able to double actually their acceptance rate while maintaining the same risk profile. And the risk score that we developed was also highly competitive to the actual bureau scores that they were using at the time for this particular segment of the population, which was relatively high risk. And so I think open banking data and the models that you are able to build off of open banking data in some cases outperform existing bureau data or bureau models. But it's really, as Nico said, when you use those in conjunction with when you aggregate both data sources, you can really get some powerful risk prediction models. And so that's been a really good or a really key success story for one of our clients.
Thank you. And I mean, lastly, we're coming up to time now, but just the last question. I'm just playing kind of devil's advocate here, but thinking about kind of those adoption rates and, you know, what would you say to a business owner where, you know, if they did sort of say to you, well, you know, I don't know enough about it, and, you know, I'm really kind of a little bit cautious about sharing my sort of or giving access to kind of my banking data, even though we've explained sort of the benefits. I suppose what would your response be? How would you convince them, Nico?
I'd probably start. I've got a pretty logical way of thinking, so I don't know whether that'd be the best way to communicate it, but I would probably start by saying this is a regulated activity. A company that offers this service is regulated and, you know, needs to comply with a number of requirements. The data is shared under a framework. You provide consent to that company to be sharing the data. It's pretty clear what data you're sharing. You can withdraw your consent. Your banking credentials themselves are never shared with the company itself. That's probably what I would say.
Isn't there like a refresh period as well? It's only shared, I think that's part of the directive, isn't it? It's only shared for a certain period of time, like 90 days, I think it is. And every 90 days you've got to re-authenticate, don't you?
Yeah. Yeah, that may change.
And you can always request to have that the actual credentials taken away, as in the temporary access to your account can be revoked at any point.
Mm-hmm. Yeah. From your perspective, Oscar, how would you convince someone?
Well, it really depends on the business I would be running in that case. But I think, you know, with more information, with more data comes the ability to make better decisions. And so it's really, I'd say it's really for the betterment of all players in the financial ecosystem that we build products based off of open banking data and are willing to share that data because it's it's a two-way street, and third parties will benefit consumers and consumers will benefit third parties in this kind of symbiotic relationship.
Yeah, fantastic. Thank you. Yeah, I mean, it definitely sits with Hokodo's mission to, provide access to credit for all those businesses that need it, so that can't access it. So I think this is a really, really great way to do that. So thank you very much. You both have been fantastic. It's great to have a couple of experts in the room. And I hope the audience has found it really, really useful and interesting as well. So thank you very much, and everyone enjoy the rest of your day.
Thank you.
Thanks, guys.
You.
Hi everyone, and welcome to this month's episode of the B2B Club. It's Ollie here from the marketing team at Hokodo, and I'm just here to give you a quick intro to the final episode of this series. So following on from the last month's episode, focusing on the announcement of PSD3 and the impacts it will have on the world of B2B payments, this month we are continuing with this theme and taking a deep dive into one of the industry's hottest topics, open banking, with a particular focus on how it can be leveraged by merchants and third-party providers to make B2B trade more seamless and secure. So the audio from this episode actually comes from a webinar that we hosted earlier this year with the open banking provider Fuse, featuring their co-founder Oscar Wislby and Hokodo's Director of Data Science and Fraud, Nicolas Rabinovitch. So without further ado, I'd just like to say a big thank you to everyone for listening to the first series of the B2B Club, and we'll be back again in the new year with some new episodes for you. And in the meantime, I hope you enjoyed this month's episode.
So over the next 40 minutes, we're going to be taking a deep dive into one of the industry's hottest topics, which is open banking, and with a particular focus on how it can be used in the world of B2B to make lending more seamless and secure. Now, just to set the scene a little, since the introduction of the Second Payment Services Directive, PSD2 in the EU, open banking has been shaking up the financial industry and revolutionizing the way that the banks are sharing data with each other and with third parties. Initially, people were solely considering open banking with an emphasis on consumers and the advantages that it brings to the retail sector. But since the B2B industry can attract the most money, the focus has quickly turned to helping the SME and the B2B space. So the volumes and margins in the B2B industry are obviously much larger, and business customers are prepared to pay well for efficiency gains. SMEs typically make up 90% of most economies, and only 45% of companies report being completely satisfied with their firm's payments or the banking capabilities. So there's huge potential here for open banking to improve efficiencies and gain high rewards for solving them. So let's kick off with some introductions. I'd love for each of my guests to give a quick introduction, just give your name and your company, and a little bit of background on your experience with open banking. Nico, would you like to start?
Yeah. Hey, good morning, everyone. Nicolas Rabinovitch, working for Hokodo and responsible for all risk decisions on the credit and fraud side. And yeah, my experience working with open banking, I've had experience on the B2C side, and now working to leverage open banking in the B2B area. I guess, summarize my experience. It's about still much more of a nascent usage and use cases of open banking in the B2B than what I've experienced within the B2C world.